is actually live. Let me check. Let's see. Copy. Hmm. Test, test. It's actually quite low. That's great. Um, testing now. Nope. Um, where should I go? Hmm. Sound, sound levels. Oh, okay, it's extremely low. That's why. Okay, mic check. Should be loud now. Okay. Now, let's check now. Mic check, mic check. I disabled the microphone boost. All right. Wow, that's a lot of work. It says unlisted, so it's not public. Hmm. So there's viewers. That's good. Okay, guys, I need you to tell me if the volume is good enough, if the mic works fine, and if you can see the chart rather cleanly or everything is blurry. Let's close this, close this. Here's the chat. Okay, I can read that. That's great. That's actually great. All right, this I don't need at all. Okay. Hello, it's all good, both audio and video resolution. Great. Grazie Luca. Grazie Luca. Come va? Tutto a posto? Eduardo is in too. Why, so many Italians. Crazy. All right. Hello, Julian. All right, guys. Let me tell you why the purpose of this live stream, which is I'm bored. That's the purpose. Nothing else. And also, this is the economic calendar for this week. Hope everybody can see it. And there's nothing. Great, Luca. Fantastic. Now you're back when volatility is basically zero. It's good. Warm up, you know. So I said, why not make start a live stream on YouTube, which I've been told the quality is rather good, and apparently it is because I'm checking on my computer and I can easily do 2K 60 FPS. My connection allows for that, and that's nice. So Euro 107 250 looks good. Let me check. So 07 250, 07 250. Oh, that's, I don't know, what's that? 10 pips away from price now? I mean, I don't know, because time of day is currently off. As you can see, if it loads, just taking its sweet time now. We are past the London close, and my accuracy is really zero when we're talking about stuff like this. But if you're asking me if I see a reason for seeing price up there, then, well, there's nothing to me unless we go into the H4. And then what do we see? Oh, well, could be consequent encroachment of this, right? 250, yeah, that's pretty much it. Well, listen, if we went up in here, we came back down, this should be a balanced price range now. So the most sensitivity should be in this area. To be fair, I don't want to see this being closed in. And I'm taking Monday as a Judas, and then price can actually roll over throughout the week because we are creating, to me, the upper portion of the weekly range in here, and then we just roll over. Many messages. 30-minute breaker there. Okay, 30-minute breaker there. At 250, I don't see that. At 250, I don't see that, unless you're mentioning this one, but this is not the breaker. Because you're mentioning this level, 254. 254, which I don't see any breaker right here. Not even one. Unless I'm blind, which is possible, you know. The thing that I'm interested in is seeing how this is failing to go any higher, while at the same time, we are seeing that happening on Dixie and that happening on GBP. So one always asks the question, wait, why is Euro not going any higher? What's the reason behind? Is it SMT? Is it distribution? Is it weakness? To me, given the narrative that we have on the higher time frame, I'd say it's weakness. And they are distributing over the senior, and we're not doing that in a random level. We're doing that inside of this fair value gap, which is marked like this because I'm skipping this candle because it doesn't have any volume. 10 viewers. Wow. Didn't expect that, to be fair. So guys, just ask me anything in the chat, and I'll make an effort to answer that. That's simple. I don't have any discussion in mind. Of course, if I don't see any questions, I'll just start rambling about whatever I like in charts. Which maybe that's why we're here. I don't know. So today, price action was a little bit tricky. And tricky it can be tricky for me, but it might not be for you. I don't like extreme low volatility. I have no issues with medium to high volatility. I actually prefer that. But when price was in this range, which is really tight, and an order block which I might get into is just 2 pips, I'm like, nah, don't like that. I don't want to place orders which are that small. I feel like personally between the range of 8 to 15 pips in stop losses, I feel very comfortable. And that usually means either a M5 or M15 entry. Sometimes I can even go up to 20 pips of a stop loss because as I've matured as a trader, I realize that tight stop losses, they're not the the key. Really the key is finding consistent setups in the most and in the easiest condition. And to me, this is not the easiest condition. It's not because I don't have a strong daily drawn liquidity. At this point here, we are in the middle of this range. 50% is just here. To me, saying, oh, price is gonna go with very high probability to previous week's high, or it's gonna go with very high probability to previous week's low, it doesn't work like that to me. I need to see key levels being breached. So far, we had this bearish order block, this bearish candle went higher. This could have been a bullish order block. But the fact that it's failing, it's probably telling me, you know what, this is potentially indicating us that the market wants to seek lower prices. Then I look at the economic calendar and that's not telling me anything. So I guess it's pointless. It's pointless to make a forecast for now, even though I'm leaning more to the bearishness of Euro and the bearishness of GBP. While something, if you want an example of something that I find very, very simple, it's something like yes in here, where when this candle here last week was printing, I mean, it's very hard to find a justification for price to stop. When it's printing and it's like up here at, I don't know, 42.55, you see price printing up here. Yeah, you feel, I mean, with experience it will come, and I'm sure that if you study price charts religiously for probably 3 to 6 months, you will start seeing stuff like this almost on the daily. But at this point here, I have this potential for range expansion from here to here, and this is where I'm just seeking for longs. There will be short setups, but I will skip them on purpose, because what's the point? A short setup doesn't mean anything if the narrative is not there. So when we start doing something like this, and we have the session breaks, we start seeing how, first of all, we're only looking for bullish SMTs. And the reason why we're doing that, it's we have arrived at the conclusion that the market will go higher or should go higher. Okay, that's not talking absolutes. And once you have that, um, you simply focus on longs. And to focus on longs means you want to be seeing bullish order blocks being respected. Every time we go below a low, you want to reject immediately. And if there is a bearish fair value gap, you want to see that being breached and used as resist as support. So when price in here came down and took the sell side liquidity, we didn't even hit the lower portion of the gap on the weekly. We started expanding quickly from that level, and this is not a fair value gap at all. The fair value gap needs to have a context. If you're talking about technicals only, this is a fair value gap. Of course it is, because there is a separation between this candle and this candle, right? Going with this one in the middle. But if the narrative is telling you that the market should be seeking higher prices, this is not a short. And yes, you can get reactions, but it doesn't mean it's a trade unless you want to scalp super tight, like getting at 67 just to get out at 2 and get 5 handles. Congratulations, you took your scalps. But when I instead entered like here and I took all of this expansion, I did 3 times what you did with much more ease. Stefano said, I took a quick long today on ES Silver Bullet M1. Did you take it from 10 to 11? If it's from 10 to 11, I guess it's probably this one. That's flickering, not good. Wow, that's annoying. Whatever. I guess you entered at 10:33. Yeah, when is a week a gap? Well, I it can be argued that I need to drink. Sorry, give me a second. So when is a week a gap? Technically speaking, I'd say gap weeks which are very elongated, they can be one, and sometimes if it's only weeks and there is no body, I'd just skip it. Absolutely skip it. So the rule is, I don't know, let me check in this chart if there is actually a big wick. Um, Something like this. See, the wick is a lot in here, and we went into it. We missed 50% or we actually hit it. I'm not too sure in here, but let me check. So we consequent encroachment. Yeah, we missed it barely in here, but this is the most reactive portion because when you have a fair value gap, really you have the upper portion low and 50%, which is called consequent encroachment. This is very similar, but recently we've been taught that there is also the upper portion, the lower portion, basically grading the swing. And in this case, that worked nicely. Um, an example where I completely skipped the candle. Well, this candle right here doesn't hold any weight to me. It's just wicks. But take something like an expansion like this is important, way more important, because there is big volume pressing higher. This is important, this is important. Another candle which I completely skipped. Doesn't really happen that often on ES, but maybe on Forex a little bit more. But Stefano says OBM5 and new week opening gap for ES. Order block on the M5. So this one right here, two consecutive down candles, I'm guessing. Unless you're using the entirety of the block, which I personally don't do when it's all wicks like this. I use the body. And if we couple that with the fair value gap, yeah, I mean, of course. And probably, if you are tight on your stop loss, you placed it here. If you're more conservative, anything in this range. The new week opening gap, I don't even have it marked right here, but let's do it quickly. Actually, do I have the tool for that? Yeah, we don't waste any time. Oh yeah, that was clean. Very clean. Nice, couldn't really go below it. Poof. Mike Knight says, I'm always waiting for liquidity to be taken, then a clear reversal, and a fair value gap to be created before entering. What's your favorite setup? I mean, what you just mentioned, it's the setup I call slider. It's just a made up name to make it print in my head. And it's, as you just said, like this is a potential slider because we take sell side liquidity, we go higher, we come back into the range, and when we come back into the range, we created a fair value gap. So we moved away quickly. That's a good one. My favorite setup is actually having the higher time frame direction, which is very clear, and when the news drop, or even before the news, there is a sudden move against my trend into a PTA, and I just short that, no fear. Example, the euro last week was a good example. So this move in here, let me break that down. So we broke down, we hit a weekly volume imbalance, we moved away from it. Okay, fine, we moved away, nothing too important. We came back in, we hit the upper portion, H1 institutional order flow entry drill, displacement again. Okay, fine, this is probably the low of the day. We have buy side liquidity in here, and we have this displacement. In this case, this is my higher time frame PTA, which I'm using. or actually important PDA, because below that we already did business, so no need to go down there to me. And I like to see a market that goes quickly to that level. And on the M5 it can actually be seen even better. I want to see speed. As soon as it starts moving a lot after a consolidation, I'm easily buying up down here, no fear, because I've already did my homework, and I feel like these trades, when they move this quickly, nobody wants to get in, and that's when I'm just jumping in. It might be scary at the beginning, but you'll see you will get the best absolutely feels down here, because the market will tend to move rather quickly. And in this case, it happened. There was new. We had news at 8:15, so it happened a little bit before that. Actually, at that same time, and then we had other news, and we just kept pressing higher. So yeah, fast move against my bias. That's my favorite thing. And this can actually be classified as one of them. This is a fast move. It's going into a good level, and I think on the H1, on the H2 is a little bit more visible. It's the same for value gap. Let me actually show this, and you'll see it's basically the same logic. And since we moved very quickly, this is generating FOMO, and FOMO brings in orders, and orders are great for smart money to get a counterparty. Because if the market is low, retail is not that enticed to place money at risk. But when it starts moving quickly, near, people are start chase the price and reverse. On top of that, as an extra confluence, we have GBP pressing higher. This is failing to go lower. SMT also in here. That's rather good. Do you need to catch this one? No, but this can be your framework, because then you expect a move from here to maybe down here, and you have a range of 36 pips, and if you can get 15 or 20, that's good. That's already a good trade for the week. I think I shared that on Twitter as well, but nobody's watching that. I'm only famous on Telegram now. 5%. All right. If you have any other question, or people are seeing the fair value gap and are shorting, and our price will come back into the M30 Well, yeah, this is where time of day is important, because to me, if the breaker that you're mentioning is hit during the Asian session, I don't care that much. I prefer to see that in high volume sessions, which is namely London or New York. Do you wait for hourly liquidity or just any liquidity on a time frame? Well, it depends. It highly depends. So let me make an example here. Let me also go in a chart which I never use, the one of Bitstamp. So say that I have a fair value gap in here, and let me actually edit one thing, because I want to understand why it says that my privacy is unlisted. Why is it unlisted? I want this to be public. I don't know, whatever. So, and we have, this is an H1 imbalance, okay? An H1 BC went to the upside, and I am bullish, and then I see something like this. Price goes, it's a consequent encroachment, moves a little bit, then goes higher, goes lower again, then fills it, and then it starts going. Okay, fine. This low right here, it could actually be an M5 low or an M15 low. Most likely it's going to be an M5 one, and I'll be using that one. But it's just because it's doing the turtle soup before completely filling the imbalance. On other occasions, say here, since we took this buy side liquidity, and we also this one, and we went higher, and then even higher, and then we started breaking down. In this case, I can use this one, but the premise is the same. We are going below lows, either because we are starting breaking down in sense of retracement, expansion, retracement, expansion, retracement, expansion, or we are doing that just inside of a PDA and we're running stop there to accumulate the most orders. So I don't use any particular time frame. I'd say though that the daily H1 and H4 are rather clean and they will give you nice moves. Absolutely. I mean, after taking this buy side liquidity by this is terrible, but this is the worst chart I could have ever taken. After taking this buy side liquidity by roughly 20 pips, then we started moving lower, and from the moment we took this low right here, we started having a displacement of 50. Now it's not a lot, but that's Euro USD. If you do apply the same concept, or I don't know, maybe Euro CAD, you will see that on the M15, it will actually move probably more than Euro USD. So we took this high, we started breaking down, and yeah, we moved 35 in a span of nothing in this case. And here, the same logic can be seen. We have a fair value gap in here, which was not completely filled, and the moment we created a high here, and this is gonna be buy side the moment we come back into it, but we need to move away first, and then when it hits, you say, fine, I'm a willing seller now, price starts breaking lower, minor retracement, breaks down again, break structure and whatnot, comes back in, order block, and capitulation lower for 25 pips. Now, if this one wasn't an H1 swing high and it was only visible on the M15, it didn't make much of a difference to me. So I hope I answered your question. But if you want to have a rule, just use daily H4, H1, those are good. Why do I like Tesla? Um, back in 2018 and 19, I was really into his works. Okay, so I read this autobiography. I was watching basically every video I could find on YouTube, every movie, everything, and I just liked the guy. Very smart, uh, brightest guy that ever lived on Earth, most likely, and I just liked it. No particular reason, and then of course after 2 years you start having somewhat of a brand, so you just keep it. I mean, I could put my face right there and just say, oh, that's me, but I mean, if you want to see my face, just ask me. I don't care. I don't care about that level of privacy. When I'm a millionaire, maybe I will care, but for now, whatever. You're welcome, Mike. I'm glad I could help. Way, we finally hit it. Perfection. And for those that just joined, I was looking for the complete closure of this weekly gap. Not that I was waiting for it like a crazy man. I was just saying, okay, might actually go there, and we just went. See, we created buy side here just before, and it's only on the M5. Doesn't make a difference. Still a turtle soup. And now, I don't want to call the top, but if we start breaking down, to me, nothing wrong with a short till here. And as soon as we go past this, if we go to the left, we also have an imbalance here. So we can now work inside of this weekly gap bouncing. Also about the conspiracy. Oh well, yeah, when he died, the FBI came and did this and did that. I don't even remember if it was the FBI or the CIA, but they took propulsion and whatnot. There are so many conspiracies nowadays, I just can't keep up anymore. And I basically moved away from that way of thinking. And whether it's in politics, whether it's in market making, whether there is an algo that controls all the markets, I don't care. I don't even know because I only care about things that I can actually um, test for myself. So if you ask me, do you think there is an algo in the market that runs price? I can say there have been instances where I can see that there is something that is very precise, but at the same time, that's only us looking for confirmation bias. So oh yeah, it perfectly at this level, so there must be an algo. Oh, maybe we just went below this high and this level doesn't have any meaning. We don't know that. But as traders, we need to have levels, and at these levels we either buy, we either sell, or if it doesn't go there with smoothness or with speed or with slow momentum, then we start having our strategies. For example, I like fast moves. Some other people, I'm 100% sure that they like to see price going slowly towards a level. Does it mean that my strategy is superior? Absolutely not. It's just personal preference at that point. To me, if you're reaching my level with very slowly, I don't like it. I will not place not $1 of risk. All right. Let's see. Okay. That's crazy. So basically, um, I shared the live stream on Twitter, and since it's an external, how can I say, link from YouTube, it's only showing that to 6 people. That's crazy, crazy. They don't like external links. Fair enough. Have you ever tried applying the techniques to stocks? It seems to work, but Forex has better moves unless you have earnings. Oh, well, I read a blog, was rather interesting, where people started saying, "Oh, do you think Forex is risky?" And they argued that Forex is the less risky. Um, because in terms of percentage of move, the hierarchy is Forex is the least risky. Then we have stock indices, so DAX, FTSE, US 30, and then the individual stock in terms of percentage, they move much more. So let me pull a random one. Let me just say, I don't know, Netflix. Netflix today moved 3%. Okay. If I take Euro USD in percentage, today it moved 0.5045. If I take an index like Dow, for today we moved 65% lower. So Forex is not riskier at all. It's just the leverage that we are given in Forex that make it risky. Because we don't have high leverage on futures unless you go to a discount broker. But if you go to any broker that basically stay in Australia or Cyprus or South Africa or whatever, you most likely will have anything between 100 to 1,000 leverage. And that's crazy. Because if you have an account and you're employing all the leverage you are given, so say, I don't know, say $100 account. Let's make the math as simple as we can. And I employ all the leverage that they give me. I just basically need 2 pips and I'm out. I'm margin called. That's it. My account is gone. Instead, if I give, I don't know, let's go 1,000, okay? And I have a leverage of 30 to 1, then the maximum size I can place is 0.30 lots, which is a lot better because it's very hard to blow an account with that size because you need multiple trades. But with a 100 leverage, I can place one lot. With 500 leverage, I can place 5 lot, and 5 lot means that basically every tick is what? It's a lot, and I just need, I don't know, 5 pips, 10 pips, and I'm out. I'm margin called. That's it. My account is gone. It can really make money disappear. It's like magic. The longer it goes, the weaker it gets. Yeah, of course. Of course, if a market is really going higher and it's leaving also imbalances below, eventually it's going to hit a level of resistance and it will seek to fill those. And that's probably taught by Chris Lowry too, before ACT, and many others before even Chris Lowry. Bye bye, Luca. See you soon. See you soon indeed. We will start doing some crazy things. Alrighty. Well, I'm actually glad I didn't trade today, cause I would have stared at the chart and potentially take this short, and then it was either a break even or a loss. And the reason why I wanted to take this one, it's we have a bearish order block with a fair value gap, and we moved away from the daily BC, so this low can act as resistance. And as you can see, it started acting as such, but then the news dropped and price rose. I don't even know the number. I'll just check it. It'll be quick. So yeah, we had a negative number for the services PMI for USD, and that drove USD lower. Thank you very much for the live stream, my man. First one I've been able to catch, and thanks for answering my questions. No problem, brother. No problem. Yeah, I remember you were always either at work or busy and never able to catch those. And that's why I also began recording it. But the good thing about YouTube is I don't have to record it because they are saved. Yes, but we have an H1 CB for Euro, maybe BC. I don't know. It's better if you point out to the levels too. So maybe say PDA at this level and what PDA you're looking for, like CB at 200, because it's it depends on the time frame, and besides, we have so many PDAs that we can get easily lost. But for me, if we're talking about TCB, well, I don't know. I really don't know what you're saying, brother. How did you master your risk management? Can you share some tips on how to cut your losses? Okay. So, my risk management approach, while I don't think it's the greatest for having big runners, it's actually good to cut losses. So I have a max 2R per day loss, and I haven't been hitting that for a long time now. Not because I don't get two losses in a row, but because if I do get two losses in a row, many times they're not going to be full risk. What I do, it's um, it's a little bit probably I think it's gonna be called algorithmic theory. I don't know about that, but I try my very best to avoid news when I am uncertain about the drone liquidity. That's one. That's already risk management, but it's hidden. You don't see that because I don't take the trade. Then if I see a level being breached, so example, say I took this short on euro on the on this order block, which also lines up with this level, and there is a gap. I take it, and as long as we are closing above in here, but it's nothing major with no displacement, nothing big, I don't care. So in here, I'm basically break even paying commissions. As soon as I see this candle, I'm like, okay, now I need to be alert. I need to see the very next candle go below and don't even touch this level. Actually, not close. The closure needs to be below this level, okay? As soon as I see this, I'll say okay, fine, good. Next candle prints. And at this point, that's where let's remove the fact that we had this big candle, because I would have probably been out here or just not take the trade. But as soon as we hit this level multiple times, my thinking is we don't need to revisit this one because we already did the business down here. So I can place my stop there. And if it comes back in, most likely, since we hit this level so many times, it's not going to hold anymore. Another example using euro can be actually this one. If price is quickly dropping, so we have a scenario where we have an initial consolidation, then we break lower, we go above it, and then we start trading like this. As soon as you see this drop and I start seeing the right side of the curve taking out levels, which should be bearish, but they are not because the narrative changed, then I can easily start trailing my stop to places where I don't think the price needs to go. So if I get an entry here, and I'll just add some just to fluff it off a little bit, stop below this candle and a target above this. Okay, let's keep it very simple. Hits it, okay, fine, nothing there. Hits it again, okay, good. My stop remains here, okay, so I'll actually have my stop as a red one, so I can tell you where I'm trailing, where I'm not. So stop remains here. Does my stop need to change when a structure is broken? Not necessarily, but that's already a good one. Okay, it's one of the reason why I might change. The thing that I like the most is a quick move away. So we start moving away here. So I'm like, okay, we already did the business in here. My initial risk, because I don't know how far it can go. I don't know if it can go below inside of this one, and my stop is here, it's safe, and then it works out. As soon as you see this candle going up like this, closing like this, say fine, okay, good. My stop immediately goes here. So my risk, which initially was 16 pips, now becomes 4. So 16.4, that's if I get a loss now, it's gonna be minus 0.25, and that's already good risk management for me because I'm trying to buy a falling knife, and the market is proving me correct. So maybe it doesn't need to revisit this level. But I don't place it to break even because at break even, it's not structurally wise. I mean, what's the point of break even? Point of break even is just I'm probably scared to take a loss, so let me move it to a random place. No, I just follow the structure in this case. Then in here we have this move here. We created a fair value gap. Do I move my stop below this one? Not yet. We react positively from the fair value gap. We finally go past this range, this daily BC, and now I have an order block. I have this one. I have a reaction from a fair value gap which is fully filled, and no, it's not mitigated, it's filled. Goes higher. At this point, my stop can actually be down here because this level, I think, no need to go there. Then, as price hits this level and moves forward, my stop goes below here. And then here, when we are starting approaching, I've already taken a partial here, a partial here. Then I can be a little bit more aggressive and placing it like down here because I'm allowing price to hit this fair value gap because at the end of the day we have a low, we have a lower low, this is a breaker. If price comes back in inside this fair value gap, I don't want to be basically I don't want to be stopped at support. Okay, so since we had these two down candles and then we moved higher, really the imbalances that needs to be filled is this one, not so much this one. So I can move it here. Then as price keeps pressing, and I see fair value gaps being respected and fully filled, I can place stop here, and then till I hit my final target, which was up here. So I hope that was clear enough. I just follow the structure, and if a PDA has been used and we had the move away from it, I can place it just there. You're welcome, Stefan. See you next time. So Julian, sorry, but I was going in a rant about stop placement. You said hi. Okay, let me check that. 67.84, 67. 84 in here. An H1 in the H1. Okay. 784. I'm confused. Let's see it. 784. You say there is a fair value gap in H1 CB. This one in here? So in the H1 I don't see anything, brother. Okay, when do you take partials? Um I take partials at what I call logical levels. And by logical level I mean if I had that trade in here, okay, for whatever reason I managed to catch a long, which I didn't. CB, brother, I don't see it. I don't even know what day you're talking about. CB, this one here, because in here there is nothing. I don't even know how many days backwards. 31st of May. This one? Nah, okay. Alright. I see it now. Not terribly important to me, to be fair. Because if I start using all the fair value gaps, I'm gonna have a big mess. So yeah, sure, but I can go in here and I can prove it that inside this order block there's going to be an M15 level. Look, see, fair value gap in here. So that's the reason why we moved. Or you can say, oh, the reason is this one. Do we really know? I don't think we do. But to me, the most important range, so recency, it's more important than all the fair value gaps. But in this sense, so I use the most recent ones in the lower time frame, the most recent displacement, but those on the daily, I don't have a specific rule of like 20 days, 40 days, 60 days, like ICT does. As long as we are close to it, I have it marked. So when will I remove this BC? It's I remove it if we are like up here, so we have no business anymore, or if we're like down here and we have no business doing anything down in here anymore. Since we are hanging around this level, it's being used. Sure, it's an OTE, fib, and whatever, but for me the bias currently is unclear. So I will answer Salty Winger. Just give me a second. Because yeah, we can be in a OTE level and whatever, but see, another guy found another reason. It's an M15 BPR too, because we went lower and we went higher in here. But since this is not my model, these are the moves I miss. And there's nothing wrong with that. Because I will get a move on another day, but if I start focusing on everything, that's where I get nothing done. So how do you correctly identify if order flow is bullish, is bearish or bullish? Okay, easiest way is watching daily and weekly. And that gives you a decent perspective. But then intraday, if I want to see bullishness or bullish order flow, I need to see mainly three things, which is when we go below a low, we need. Okay, let me actually pull up ES because I think that can help. In ES in here was bullish, okay? For this day it was bullish. It was bullish because we wanted to fill the weekly gap. I want to see three things. If we go below lows, I want to see quick reactions away because I want confirmation or proof that it's just going there to accumulate and not to break structure. I want to see bullish candles offer support. And thirdly, I want to see bearish PTAs in the lower time frames failing. They have to fail. And once they fail, if breached, so breached, it can be used as support to go higher. Exactly. Stick to one model because my model is not rigid at all. It's anytime I find an easy drawn liquidity, as long as I have a fair value gap, whether it's in OTE level, whether it's after a raid, I can get into that as long as I can justify my risk easily. But for Euro, at this point here, I couldn't justify a run up here. Because yeah, in hindsight, I mean, I see it. It's trendline liquidity. We have a busy up here. We moved higher, of course. You're welcome, Salty. But in hindsight, everything is easy. And maybe for some of you, this was the simplest trade ever because you get in here and you have a reaction. For me, it isn't. And I don't even think it's a weakness of mine or a weakness of yours if you don't see some specific setup. It's just I'm not a big fan of these. But the good thing in here is we moved quickly, okay? But as soon as we move quickly, before I can even begin to think, oh, we're gonna go up here, we need to breach this level on the daily. And that's not an easy task. The fact that we did it, it's because of the news, but and after that you have no opportunity to get in there. But the same logic, look at this. The same logic that happened in here, we breach it and come back in to go lower, but in this case we failed. It's the same logic in here. We go higher, we create a fair value gap like just like we create in here. We go below it and higher it goes. Why is it not going above this high? Oh well, it's relatively weaker than GBP, which already did it. And to me, the higher time frame institutional order flow is bearish. So I'm not really that convinced that that longs are the best opportunities for me. But if you are bearish for the week and you get 33 pips to the upside, doesn't matter in my opinion, you made money. Congratulations. In my model, Euro USD is strongly short. Yeah, that's why we have a swing position. I know. So since it's strongly short, we might want to be skipping levels like this of bullishness just to focus on the shorts and really load up there. So we start seeing moves up to the upside as Judas swing against the higher time frame trend, which is good because it means we are going into a deeper premium and we will have more range for the downside. So we should be happy about that. For how long have I been rambling? Roughly 1 hour. Nothing crazy. I think I'm gonna go a little bit longer. I should check Telegram in here. All right. So guys, give me some feedback. So far, how is the quality and the audio? Because I'm pretty confident YouTube is strong enough to handle high quality, but I need your feedback. And also mind that my microphone is just a gaming headset. It's not like anything professional, so I'm more focused on the quality of the video rather than the audio. When we go on the everything great, brother. Thank you, Tid. When we go to the weekly Euro USD, we can see our grabbed liquidity plus went to a monthly CB, 3 months. Oh well, yeah, fully aware in here. We just hit this one, bingo. Actually, let me go on Saxo, which there it's marked. And it's not. Fantastic. But it's this fair value gap here that is mentioning. To grab it and then lower to go higher and build the liquidity. Oh well. Uh, okay, this chart is rather clean, so we'll keep it this way. We are now somewhat stuck, because technically speaking, from this low to this high, we came back into a discount and we hit a weekly bullish order block. At the same time, last week, we immediately rebalanced this low. So we are in a place of equilibrium, and I need to see some level being breached intraday before taking decisions. But on weeks like this, I was completely bearish. And I was bearish, didn't look for longs that much, simply because the goal was to fill this one in here, and this one in here, and this sell side below this one. So throughout all of this, you can be bearish every single day, and every time there is an up candle, that's a premium. Okay? Premium, lower, 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 premium, lower, premium, lower. It's basically overbought in a certain sense. Now we are stuck between both two weekly levels. So once we fully know which one is going to be breached, so say we fully close below this weekly order block and we also close below this one, then our range to play is gonna be something like in here, 120 pips. That's your weekly range expectation, and if you can get two trades, two shorts, or you can get a one shot, one kill, perfect. That's what you wanna do. And then you can blend time of day, you can blend the market maker, templates, the models, and whatever. And then you just build a system. I can tell you now that from my system, I really didn't have much to trade today. Because while this is technically speaking an OTE, I don't like it's too tight in the pips. And this is the only trade I could have potentially taken, and I would have just moved to break even and maybe get slipped. And then this was a clean scalp because we took the low, we go back into the imbalance, we pop, but we never took the high, so not the greatest of days. Why do you use Saxo as a broker on TradingView? I think Saxo is the one that better represents liquidity. Cause truth is, so say I use Oanda, okay? On Oanda, everything is gonna be smoothed out. It's gonna be super smooth. So from here, we then start delivering buy side, buy side, buy side. That's not probably true. We literally skipped, and Saxo show that. See, from this closure to here, we have a real liquidity void. There was no liquidity. And if you go into some MT4 brokers, which have lots of liquidity, you will see the same. There is an actual gap. So in terms of drawn liquidity, this is extremely strong. And by the way, now last week I've been using FXCM because the charts I think are a little bit cleaner, but because Saxo is messy, but to me that's really what liquidity is all about. Because you will start seeing ugly candles during the Asian session because liquidity is low. Yeah, they don't show gaps. And the same thing is, oh, the weekend gap, I can see that on Saxo, I can see that on FXCM, I cannot see that many times on Oanda because they smooth it out. So see, yeah, where is it? It's not there. They just print the candle, but really there might be a void. See, even, okay, let me go to forex.com, same logic. Where's the gap? The gap is not there. If I go FXCM, well, the gap is not there. If I go to capital.com, see, it's already showing that. It's telling you we really gapped. And what I do is I blend both Saxo to my feed and to my own MT4 or MT5, depending what I'm using. And then I will have an extra confluence if I want to go short. Also, when you look for brokers, the one with the most liquidity should be IC Markets, but it's not here. The data feed is not here. I may actually also use Pepperstone because if I can find it, Pepperstone is here. See, Pepperstone is a good one with good liquidity, but Saxo has even more liquidity every single day. So they better, truly, they better represent liquidity in the forex market. And the good thing about futures is we never have to worry, wow, which one do I look? CME. You always have that every single time. You can never be wrong with CME. See, this is a real volume imbalance. Nothing we can do about it. It's a volume imbalance. That's it. It printed. This is again a volume imbalance. And we are selling off after feeling that. Equalize. This is clear engineering. Boom, boom, boom. Selling off. I'm gonna make a bold claim in here and say that this low will go before today, but I'm not taking a trade, guys. So if I don't have an opinion backed by money with risk, my opinion doesn't count. Yes, I think so. I think for Forex, Saxo is the one with the most liquidity. Pepperstone is a good alternative. And I don't even remember where I took this from. I mean, I know that the Saxo tip was given by a guy called Francesco on Twitter. Um, we can say we are friends. We chat probably once a week, and he only trades Euro USD and extremely disciplined, good guy. He makes video too. He has a Telegram channel, so feel free to subscribe to his because I don't feel like we are in a competitive stage. He has good content. I have my own content, and that's it. If you need it, just send me a message privately, Julian, and I will I will send the Telegram group to you. Oh, spooling magic. I just shorted. I mean, you'd have to insurances now, because I said it was probably gonna go lower, probably here, and already it moved 5 handles. Yeah, scalp. I mean, I don't like the 5 handles or the 10 pips logic. I think it's a little bit silly. But yeah, I mean, this is about time because the hot zone for the PM trend is from 15 to 16, 14 to 16. So yeah, we should create a fair value gap in here. I think it's a shortable one, but let me also check out other conferences. Yeah, I mean, there is a little bit of an SMT in here, lower, higher. This went higher too. And the only one I wouldn't really go short is NQ because it feels like it's the strongest. This is very weak at any point in time, can actually pop like it did on Friday. So I'd say yes is the way to go. If I got stopped out, I would have to sell some organs. Oh, yeah, some kidneys, alpha heart, some lungs, because why not? All right, guys, I think I'm gonna cut it, stop the live stream probably 5 minutes. So if you're in here and you need any extra question, just know that I have 5 minutes and then I'll go. Let's check some intermarket analysis. Wow, that's bouncing. SMT with euro, interesting. Euro GBP sold off. Gold stayed in a range after the displacement higher, and crude oil, it's a mess. Truly a mess. But this morning was a perfect market maker sell model. You're welcome, Julian. Thank you. Thank you. These messages might seem silly, but I really like them when people just thank you for what you're doing. Oh, good luck with math. Good luck. I'll actually check crude oil, but not from this data feed. Let me give me. I mean, let me go just to the real one. And after I study it, I'm gonna work to escape the matrix. Yeah, Andrew Tate like escape the matrix. Oh yeah, that's, I'll give you that. Oh, I don't think you can see it. Let me check. I'm trying to tell you exactly the color, but once I went for the double click, I'm not seeing. Okay, it's visible. Great, great, great. Okay. So the color is this one right here. Let me go 40. I can give you all the scheme actually. This is the up candle. This is the down candle. And borders and all of this is just fully black. So this is for the up. And if you ask why I'm using this one, it's because white is a little bit too bright and dark. I don't like it. So this gray, which is somewhat like gray, really helps. And then the colors, they're not like the thickest of the colors. They're a little bit like pastel-like because I think they are cool. No other reason. But this is the background. That's the up candles. That's the down candles. The rest is just borders and wicks, just black. Basically 0, 0, 0, 0, 0. Right, so I was checking crude, and it's rather cool. So we took Pyside, we dumped it. No way for me to really get into this move unless I go into the M1. Then, of course, I'll find something there. Huh. Yeah, not the cleanest. But this is a trade. I think the institutional order flow entry drill with the breaker. So we have a breaker in here. We just hit the level in here. And you can enter as soon as we breach this, as soon as it tests, you can have a stop, I'd say, here. Because you want to be just past the upper portion of the breaker. And also above a swing high. Because we have some protection of this auto block then. Because the auto block can actually, especially on the M1, can go all the way up here, completely breach it, but then close and work like this. So if this wick was up here, you wouldn't have a stop out with a stop up here. This is also clean, equal eyes, taken, and then starts reversing. And this is probably the cleanest because we have a nice breakdown, 2 consecutive up candles. We come back in, we hit it, volume imbalance goes lower, holds, hits the mean threshold, lower it goes again. But this is all meaningless without the drawn liquidity, which in this case we easily have. So the gap really is from this low to this high, but this is a vacuum block from month 4, which everybody probably skipped, and that's perfect reaction because this is like very similar to an order block. So we don't need the full closure down here, which I will place in white. White is too bright. May go like this, good enough. So as soon as we have the random stop, we start looking for opportunities. Then we mark the key levels that we might be actually fill. We see there is a sell side liquidity down in here. And this is our range. It's on the other side of the curve because consolidation, smart money reversal, and then it drops. Opportunity on the M5 were inexistent. On the M3, we had this fair value gap in here. But yeah, not the greatest day to trade. What can I say? Oh, that's again delivering nicely. Dow is taking the low. And yes, is retracing, but I don't like this order block. I just don't. This one I like a little bit better from the M15. We have a gap in here. We might actually have a bounce before selling off again. And the reason why I wouldn't really bet on a move higher being a long opportunity because we already hit this. say the weekly volume imbalance high was up here, which was basically we had all of this range which was left unfilled. This to me was a long because we're going into an order block plus for value gap. OTE and the daily range can actually be fulfilled even more going up there. So yeah, that's why I think it's just a minor bounce to go lower again. So this is basically the part of narrative, and if you don't have that, I think trading can actually be a little bit harder, but you will develop it with time. So guys, that's it for this one. Thank you all for who joined, because I wanted to test how it worked, how if it was smooth, audio quality, video quality, everything looks perfect. And see you in the next one. Bye bye.